Hello, hello, hello. Happy Wednesday, everybody. How is everybody doing? Good morning, Donald, George, Patrick, Ken, and Jacob, and all the people hiding in the background so far. Let's see. We had ADP numbers coming out. I'm going to go quick because we're bringing on Bob in about a minute. ADP numbers coming in lower than expected. There is not a substantial amount of correlation though between that and non-farm payrolls, but everybody's watching that, or most people are watching it and saying, okay, that means we're having more weakness, blah 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 blah. So real stuff. We had the balance of trade, imports, exports coming out. S&P composite and services numbers coming out at 8:45, 15 minutes after the open. Still expected to be in expansion. So the real thing I'm watching is expansion versus contraction on both those and the ISM non-manufacturing. I'm also going to be focused on the ISM non-manufacturing employment number to see where that falls, to see if it start to confirm more so in the services industry with any contraction in labor. So that's where we sit. Then you have the EIA numbers. Comm services and healthcare are the little strong areas this morning. You can see that right here on the sectors. Financial technology and basic materials are weak. CME Fed Watch tool still favoring. We got pause, then starting to cut in July now. July cuts. Yay for July cuts. Fear and greed in neutral mode. Gamma flip, by the way, is 41.27. We're trading one 41.21, so we're right at neutral gamma. So any sell-off starts accelerating negative gamma, and dealers sell into the sell-off. So amplify the sell-off. So just be advised by that. Any rally goes into positive gamma at this point. And in terms of earnings, nothing on the blocks. Overall, the only thing I'm watching, we have some double bottom patterns. Some mini, that was from last night, that did not trigger. Mini double bottoms, that's the only thing that will get me bullish intraday at all. Good afternoon, Charles. Good morning, Anissa. With that, let's bring on Bob. Hey, Bob.
What guys?
So, what are your thoughts overall? What are your thoughts? We're going to have to touch on crude, but what are your thoughts on the markets? And we're finally getting a little mini pullback, and now the market's pricing in a lot of cuts. I mean, the cuts priced in are getting substantial again.
Yeah, but they're pricing them out later, aren't they? I still think that's silly. At least, I mean, the last time we talked, the first cut was in June, and now I think the first cut's in July.
We got
But yeah,
July,
the cuts.
September, November cut, December cut, January cut, March cut, May cut.
There's a, in my feeling, there's a disconnect between what bonds are doing and what people think that means the Fed's likely to do. So there's always been a disconnect. People think the Fed controls bond yields, and they don't. They have some influence 2 years on in, maybe even 5 year notes. But when you get to the 10 year on out, it's inflation expectations. And that, again, I think is where people are going to be a little bit surprised. Inflation is likely to be a little stickier, especially when you add in now what OPEC just did. When we look at a crude oil chart, I did some oil commentary yesterday for the CME group, and my number one headline was no relief. And we see no relief here either. If you tighten that up, Mikey, you'll see that we jumped back after a down breakout of this channel, negative breakout to the downside. We popped back up to the top of the channel. And after a move like that, you would expect, doesn't have to happen, but you would expect a breakout and a continuation to the upside after that fake breakout down. Not quite a shake and bake, if I'm right, Mike, but going back to the top of this channel and then breaking out to the upside, which it hasn't done yet, quite frankly. It's just sitting at the top. If it does, it's likely to extend past the 200, in my opinion. So, Mike, I see you have a line just above the 200. So from that perspective, that now brings about, people forget how much oil has to do with services inflation, and services inflation is where we're getting no break. So people have to drive to work. They demand a raise if their gas prices are higher. So, and as we've talked about multiple times, and we're starting to see it, you don't get a reduction in wages, you get layoffs. Wages don't get reduced. We've talked about that for 8 months now, and we're now starting to see it actually happen. So, no wisdom, it was shake and bake, not wake and bake. Jesus, you pothead, it's early. Anyway, it's really early. Wisdom lover. I love that name. He or she loves wisdom. Anyway, the ADP and the non-farm payrolls, like Mike said, don't have a month-to-month correlation, but what correlates with them is the trend. And if you look at a line chart, you can get one. If you guys ever just want to see like basic data, basic economic data, just type in the name of the data in your search bar and then put investing after it. And then go to investing.com and they'll have charts. Okay, they're very basic. And you can go to investing.com, you can type in ADP employment data, investing, and then you click on the investing.com link that comes up in that search, and you'll see a chart of ADP non-farm employment change. And then you can convert that to a line chart. And if you make that a 2-year, you hit the 2-year segment there, you can see a pretty significant, although flat, let me rephrase that, a pretty apparent, although flat, downtrend over the last 2 years in ADP employment. Then you do the same thing. You type in non-farm payrolls numbers investing, and you click on the investing.com link, select line in the graph that comes up, and then hit 2-year, and you'll see the same thing. Basically, a significant downtrend. So you can show that. Well, let me rephrase that again. An apparent but pretty flat downtrend. So when it's a flat downtrend, it doesn't take that much to break it up to the upside. But it also, both of them to me look like they're going to break down when you add in the layoffs and everything else that we're seeing. And then lastly, the JOLTS jobs number yesterday was interesting to me because we got below 10 million for the first time since July of 2021. That was the last time the JOLTS job number was below 10 million. So that's my overall opinion on everything. We have earnings. Earnings begin next week in earnest, Mikey. Is that right?
Yep.
All right. So that's kind of, to me, what I've been saying for a long time is pretty critical. So we want to take a look at that and see how bad the performance is when they beat and how bad the performance is when they miss. Or if the performance is good, then I'm going to probably rethink my entire thesis of the October lows not holding, because it should be this earnings season. It could possibly be next, but we should start to see some weakness. So I will accept Gordon Johnson Jr., William. I'll accept that nickname.
Uh, question: in terms of inflation, will lower factory orders and global demand decreasing pretty much everywhere from supply side balance out? Oh boy.
Will that cut the potential? I think he meant cut
Okay.
the potential of rising costs. Yes. So this is part of the formula, Charles. Yes, it will. All right. Falling factory orders, manufacturing PMI and compression. Okay. The ISM non-manufacturing number is the biggest thing to me because you have to see compression or contraction in services in order for inflation to take a serious leg down over the next, say, 6 to 12 months. So while I said in one of my notes last week that the manufacturing ISM was the most important one, now that we've seen that miss, you want to see if that's a trend with services ISM PMI as well. So yeah, it does work that way. You want to see this data start to fall, and you want to see jobs data start to fall, and we're starting to see that. Okay, we're starting to see cracks in the jobs numbers. Also, something I forgot to bring up, the savings rate. Okay, consumer savings in dollars is just about negative. And what I mean by that is they've just about spent their excess savings. We're a hair into excess savings territory in terms of dollars, but the trajectory is abysmal in terms of savings rates. And we're seeing credit card debt continue to rise. So from that perspective, consumer slowing is a real thing, and this will help inflation. Okay, this will help beat down inflation, and this is what I've been wanting to see. But we continue to hear. We heard it from Master yesterday. Mike mentioned that. We also heard it from Collins, Susan Collins, from the Boston Fed president, and Lisa Cook, the Fed governor. All three of them said the rate's going to be above 5% and we need to hold it there. And all three of them, I'm paraphrasing all three of them, said we're not likely to cut rates this year, that the market continues to price it in. So, yeah, I would like to throw out the last thing, something I tweeted out yesterday. It was an article, a Wall Street Journal article. One of the largest shorts out there is TD Ameritrade now. 3.7 billion collectively in shorts on TD Ameritrade. It's a very, very big position. So some people out there don't think this little mini banking crisis that we've seen the last of it. I'm not short it, whoever asks. And William, I knew you were joking, and I don't mind the nickname, to be honest. Gordon Johnson Jr. is fine with me. He's brilliant crazy, and I love that. Mike's also brilliant crazy. Mike's brilliant weird, but Mike is good weird. There's good weird and bad weird. Yeah.
Okay. Why aren't you wearing your black shirt as your t-shirt? TD interview?
Do you guys have any idea how many black V-neck t-shirts I have? You'll see when I wear this kind of a shirt, it's because I'm in a rush. And I'm in a rush this morning. So I had the TD TV spot, which it seems like you saw, William. The TD Ameritrade TV spot. Then I've got this. Then I've got a couple of quick commentaries I need to do that require a collared shirt. So it just means I'm in a hurry today. The people are demanding a lot of things of me. We're recording the podcast on Thursday. We do not have our beloved Mike Arnold this week on the podcast. We have Vivek Ramaswamy, who's a presidential candidate. His team just basically said we could do this Thursday or not at all. So we had to bump Mike. Mike currently is not speaking to me, but I hope to make it up to him.
All right. Well, I'm cutting you off, Bob. We got to get to the charts. That's way more important than you. So.
See, he's mad at me. Mike, run for president, would you? You'll win.
Yeah. Yeah. Uh-huh. We'll do the harmonics on that, and we'll see how that turns out.
Rest in peace, Chicago. That's it.
All right. Well, everybody, you have a great day, Bob. Thanks for popping on this morning.
See you guys.
I'll talk to you later. Bye. All right. Let's see. So again, if we take out the lows roughly on the S&P of about 41.15, watching for the more sustained pullback into the daily rotation zone, we'd be below the 4-hour rotation zone and into a clear path move. So about 4090 to 4100. The only thing that changes me to the bullish side is if we get a key close above 41.3550, then I'll watch with the double. I'm going to shift this over actually to the conservative side. Also see how that plays with the pullback harmonics. And I'll be focusing on 41.50 as the main target area. So that's the only thing that shifts me to bullish mode is if these lows hold and then it gets taken out here. And what I'm talking about is, remember, we were overextended from the rotation zone. So any pullback down here, you know, that 4100 to 4090 area takes us back to reconnect with the daily rotation zone with cycles rolling over. NASDAQ, you still, let's see here, still the double top is still viable. Close has to at least be a 1-hour close below 13,154 for the bigger pullback. The only thing, again, that changes, this is a little mini double bottom, but it need a close above 13,247.25. So those are the two things I'm watching for the up and the down on the NASDAQ. The Dow, there's not a fantastic, did this come back down enough? Let me see here. Let me see. Not yet. But if it pulls back in the open, we might have a potential double there, but it'd need a close then above 33,635. Other than that, You have a hitch here. I really need the breakdown in the Dow below about 33,430 into the clear path. Remember, all these would take it back to reconnect, possibly with the daily rotation zone. The Russell, which is what I look for the short side, we do have a little mini redrawn potential double from last night, but I'm still watching for a reconnection with 1736. Major support between 1736 and about 1763 and 1757. If we push down to this final target on the double top that was triggered yesterday, then we have invalidated this little potential double bottom. So that's the real quick overview. Good morning, Heinrich. VIX, still not a lot of fear, but if we start getting momentum above 20, I'll be paying more attention to a sustained pullback move. DAX sitting right at critical support. If it breaks below that, about 15.6 is the next key level. Notes, I'm going to be watching at the end of the week with non-farm payrolls. To remember, futures are still open on Friday to see if this triggers this massive double bottom. Other than that, any pullback would be into support about 116.05. The 10-year, we now have a triple bottom holding the rotation zone on a break below that. Let me just put up the projections down. If we do break below based off here, we have the next key yield target of about 318 to 320. The 10-2s climbing back up. Let's take a look at the actual, not the futures, but the yield curve this way, and still climb back up. I'm really interested if we start breaking above about minus 39 again. Minus 39 again will really start catching my interest there. So keep an eye on that. Where is my main? There we go. The dollar index, a little bounce back. Remember, we have the massive double bottom pattern. Don't know if that will ever trigger, but on any rally, first area would be about 101.50 and then 101.80 for the key breakdown targets back to return to a daily rotation zone. Other than that, nothing really on the bullish side. We need a more substantial bottoming pattern. Crude, as Bob said, holding up here. Either if we break below Monday's lows from the gap up, or I am focused. So far, this is a sideways correction, but we really have to get out of this overbought and cycle top, at least by doing a sideways correction. Then I'll start more watching for a breakout to the upside. Gold, moving on up, next target 2065. No topping pattern, no major topping pattern just yet, but I am watching for a more substantial top coming in. The Japanese 10-year bonds were back above 50 again, opening and then reversing, which is very interesting. But the yen rolling over, I'm really focused on it once it gets below 130.65. Euro pausing here at the 87.5. Not much going on there. If it does pull back, major support coming in at 109. Pound pausing above the breakout level on a more sustained pullback, 124. Just waiting. There's not a lot of great currency setups. Bitcoin, sideways correction. Tesla looks like another slight gap down, but really we'll start watching this if it breaks below about 188 to the downside, at least in the short term. Other than that, it would just be a minor gap play today. The spiders. After triggering that little double top yesterday, let me move up this. The little double top yesterday targets 406.99, 406.27, 405.55. That's what I'm focused on. The downside cannot. This is, yes, a little mini double bottom. That's not invalidated with this open. So the only thing is a close above 409.29, 410.20, 410.65, 411.10. So that's about it. Looking to open about 407.86. If we're going to gap down, so the first target on this would be to the close of 408.71. With the Qs, the Qs have not triggered the double yet. You do, that's just a mess. I'd be watching the Qs above about 319.50 Before that would be the gap fill to 319.13. Other than that, the only bearish thing is if we trigger the little double on a close below 317.42, 315.54, 314.62, 313.68. Other than that, this is not well formed, so I'd be watching 319.50 to the upside. It's okay, options 22. Thank you for tuning in. All right, that's where we stand. That's where we stand now. In terms of the bigger picture, again, we have weekly cycles still heading up and getting to that topping area. We have daily cycles heading down, and we're coming out of very overbought, but I am still watching for at least a little more sustained pullback going into non-farm payrolls. The only thing, again, that changes is if we have these little mini doubles off the open trigger. All right. So far, this is, if we start breaking below yesterday's low, then it's going to probably be a more of a pullback instead of a sideways correction. So far, we pretty much have a sideways correction, but we start really breaking below yesterday's low. I'll start watching for more of that, for that pullback correction. With that, I will let everybody go into the open. Thank you for tuning in. Hope everyone has a wonderful trading day, and bye for now.